Lekha, well, let's focus on the new listing then. It's been a stellar debut for solar cell manufacturer. That's Premier Energies. They listed with a gain of more than 100%, and currently as well, the stock is holding with solid gains. To understand about the way ahead, we're joined by Mr. Chiranjeev Singh Saluja, who's the managing director of the company. Hi, Chiranjeev. Congratulations. Just a week or so ago, we had you in the studio outlining the business. This time around, we're going to push you for a few numbers. But before we get to that, I wanted your comment on this, something that starts sentiment a little bit. You all had done an issue. The IPO opened a few days later. But just days before the IPO opened, you all had sold some shares at the IPO price to a clutch of investors. It could be according to the rule book, but it spoiled sentiment a little bit. What's your comment on that?
So, good morning, Nigel. Thank you, CNBC, for having me here today. So to answer your question, Nigel, this secondary sale which we had done on the 23rd and 24th of August, this was more because of the unprecedented demand we were seeing from the investor community. And the reason to do it closer to the IPO was because we wanted it to be at the same price as the listing or the price which gets approved by SEBI. This was done well within the regulatory ICDR guidelines. And most of the secondary which was done, about 70%, was done by the private equity fund, not the promoters. And if you look at the promoters' shareholding, we are still at close to 64%, stake in the company post the listing.
It could be according to the rule book, Chiranjeev, but the street believed it was against the spirit of the game. But you have given us your clarification, so we'll take that, as you said. Let's focus on a couple of aspects. Now you're a listed company. You can give us a guidance. So tell us what kind of a revenue growth should we be working with for FY25? What kind of a margin outlook are we looking at?
So Nigel, as I told you when we had our last interaction, we are looking at a very strong revenue growth because we have doubled our capacity. So looking at the strong demand in domestic and export both, a very strong demand within India, which is driving this expansion. And if you look at the capacities which have doubled, so you can really look at the guidance that we would be having a very rock-solid CAGR this year.
Chiranjeev, good morning. Thank you so much for joining in. Many congratulations on your listing. You'd be a happy camper today as a lot of shareholders have received the shares today. But I wanted to ask you, Chiranjeev, about your financials. As you mentioned, would you like to quantify that as well? You're looking at a very strong CAGR is what you said. If you would like to quantify that in terms of numbers, whether it be revenue growth or margins for the financial year, and also couple that up with the likely order inflow that you are slated to receive in FY25.
Yeah, so the order book is really strong. It's 5,900 crores. There is a huge pipeline which is in the making. So we are looking at a very strong order book. In terms of revenue, as I told you, we have doubled our production. So that should give you a very clear guidance that with a strong order book and capacities doubling, we would be looking at a very, very strong, almost doubling our revenue this year.
Okay, so this year you're saying you're going to double the revenue. So it'll move from around 3,100 crores that you did last year. You could achieve revenues of around 6,200 crores. Just to clear the air, you're not talking about revenue potential. You're talking about revenue that you can deliver in FY25. Is that correct?
Yes, if you look at the manufacturing capacity and the order book and you look at our Q1 numbers, this is where we are heading to.
6,200 crores. So we'll hold you on that number. And there'll be some benefit, I guess, of operating leverage that could come in as well. 15 to 16% is what you did last year. Will margins improve?
I think the margins should improve. The board has to take a decision on guidance, in terms of the margins. But then when you look at the strong demand in the market and you look at the kind of this sector, the way it's growing, I think there is all positivity.
So from 15% or almost 16% that you had in FY24, do you see that margins going up to say 17, 18 or maybe even 20% if you're being optimistic here?
So if you look at our Q1 numbers, we were already close to 20%.
Right. So and I want Right. So, I want to get back to the order inflow bit, Chiranjeev. You mentioned that your order book is almost 6,000 crores. What is the order inflow number that you are likely to receive? If you can quantify that, and if there are any projects or any orders for which you are L1 currently and you are slated to receive those orders, if you could give us that number as well.
So no, there's nothing like we are L1 in any order now from the government side, but then there is a very strong pipeline. I would quantify that number to be at least another 4,000 crores, which is under discussions in final stages of finalization.
One last question, Chiranjeev. What about the debt picture on your books from the fresh issue? You are planning to expand your capacity from the proceeds that you are raising. What about the debt on your books currently? Which is the stage that where you expect to reach peak debt and when it starts tapering off?
So our gross debt is about 1,400 crores. We are looking at raising another 2,200 crores for this expansion, which we are doing. And the peak would be close to around 4,000 crores, and then it will start tapering off in about 12 to 18 months.
Okay, all right. Just a quick question, Chiranjeev. You're going to be doing 6,200 crores in this year itself. What about the following year? Because I think you had told us your revenue potential is around 7,000 crores. So will you have to incur some more capex?
No, we don't have any plan for any additional capex now for at least the next 3 years. But then as we grow, we will keep adding more capex.
All right. So what would be the revenue potential post the capex that's already outlined? Because you're going to do 6,200 crores in FY25. So I want to understand, if you're not going to be doing any big capex, then what is the revenue potential, optimal revenue you can do with the current gross block?
Yeah. So with the current gross block, we would be in the same levels as you know, in terms of doubling the capacity. We should be in the range of about 6,000, 7,000. But the new capex coming in FY26 and 27, this is going to be a new twofold jump in terms of capacity. We'll be doubling our capacity in module and almost tripling our capacity in solar cells. So about FY27 onwards, we're looking at again a significant growth.
So keeping this two capacity expansions that you're talking about, 26 and 27, what is the revenue potential then post this by 2027? What is the revenue potential?
So if you look at the in terms of the capacity, as the capacity doubles, we are looking at, of course, doubling the revenues.
Okay, so then you could do practically around 13 to 14,000 crores. Is the revenue potential keeping 2027 in mind?
Yes. So yes, once the capacity comes in, of course, there is going to be a significant growth. That's a 4 gigawatt cell and module which will come in.
Okay, all right, Chiranjeev. Thanks a lot for joining in. Congratulations on the solid listing. We'll hold you to these numbers, and thanks for clearing the air as well with your perspective on why you all did that issue prior to the IPO. Wish you and your team all the best, and we look forward to hosting you back on CNBC TV 18.
Thank you.
All right, well, time to slip into a short break. On the other side, we'll get back to another company which is into smart meters. Mr. Jitendra Kumar Agarwal, who's a joint managing director of the company, will be joining in.